Like, I think there's three different aspects of crypto right now. There's digital property and digital energy running on the Bitcoin network. There is decentralized, dematerialized finance, dematerialized platforms and technology, which is other crypto platforms like, Solana and Binance Smart Chain and Ethereum and the competitors. And then there's speculation like the 48 dog coins and the 2 Saylor Moon coins and the 12 Elon Musk coins. And I think if you're a speculator, that'll continue. I think that all the NFTs and smart contracts are crypto venture technology. I think that digital energy and digital property, though, is by far the biggest opportunity, because that's going to go from $1 trillion on Bitcoin to $100 trillion, and potentially could be worth $500 trillion. So I think it'd be a mistake to fixate on the revolutionary aspects of crypto. That is, that the idea we're going to replace governments, replace companies, replace existing institutional structures with something all new in crypto. That's a beautiful dream, but I don't think that's going to happen in the next decade. And it might distract you from the evolutionary opportunity, which is if you plug your country, plug your insurance company, plug your finance company, plug your bank, plug your corporation, plug your balance sheet into Bitcoin, that's worth hundreds of trillions of dollars. You just have to own money, or you have to have a company, or you have to have a country. And for anybody that has those assets in the real world, as they digitally transform those assets, there's going to be massive value creation. So my advice is, don't become too inwardly focused on the revolution. Make sure that you recognize the evolution, right? I mean, plugging a country like United Arab Emirates into Bitcoin could be done by 3 people in a week, and it would be worth $100 billion, right? So, whereas if you pointed the entire country at rebuilding the infrastructure with and replacing everything with a crypto chain, you would accomplish 1% of that with 1,000x, 10,000x more risk. I think the rational strategy is to buy the dominant asset, in this case, Bitcoin. Buy as much Bitcoin as you can, hold it forever, and ignore the market fluctuation. There is lots of volatility in the market. The only people that benefit from the volatility and trading it are professional arbitrageurs and traders. So if you have proprietary software, proprietary algorithms, and a bank of computers, and you want to trade the volatility, and you're professional, and you know you can do it, then maybe that's a business for you. But I think if you're a consumer, you should just buy and hold and wait and ignore volatility. The more you focus on it, the more it's just going to give you anxiety. And with regard to any dominant network, for example, if you bought Amazon, Apple, Facebook, Google, if you bought Bitcoin, the only mistake that you can ever make as an investor is to sell them. Right? So if the richest man in the world is still owning the stock that he owned 20 years ago or 10 years ago, right? You don't get rich by selling or trading. Right? The way you get rich is by predicting the future and then buying a piece of the future and just holding it forever. And normally the people that are really rich, the Zuckerbergs, the Bezos, et cetera, the Elon Musk, they're rich because they're not allowed to sell. Like, if I'm a public company officer and I own the stock, I can't sell it. It's either private or I don't have that option. Whenever you get cute and you start staring at the ticker, thinking that you're going to sell it so you can buy it back cheaper, you generally sell it. You don't buy it back cheaper. You wake up one morning, it goes up by a factor of 3, then it goes up by a factor of 10. And then you realize you lost 97% of your money. So I don't advise anybody trade unless you are the world's greatest trader and you know you are. And the person that's the best in the world at this knows they're the best. 99% of you aren't. Buy it. Wait, hold. Yeah, I think Bitcoin mining is the most sustainable industry in the world. I think we're running with a sustainable energy mix, north of 50%, 56, 57%, which is quadruple every other industry on the planet. So I think that as people start to focus upon energy use, what they'll see is that Bitcoin mining is the highest value use of energy in the world. It's the best use of stranded energy. It's the best use of intermittent energy. There's no other way to monetize a volcano or a waterfall or a wind farm so effectively. It's if you're in any developing nation, it would easily be 10 times, if not 100 times as lucrative as the next best idea for your energy. So I think Bitcoin mining in general is going to usher in a renaissance in the monetization, the development of stranded and sustainable energy. If you're the mayor of a city or you run a governmental institution, the opportunity for you is to build a balance sheet based upon Bitcoin. Bitcoin is universally recognized as community property. There's still a lot of question about whether or not other cryptos are property or securities, and most likely they're all security. So if a public official were to endorse a security, it's unethical and it's probably illegal. So any kind of municipal initiative based upon any token that's deemed a security is just not going to work. It's going to violate every public ethics rules and probably most of the anti-corruption and bribery laws in the world. So the only thing that's a safe harbor for a public official right now is Bitcoin, because Bitcoin is property like land. Anything that's deemed to be a security, it's like, you can't basically do a deal with Facebook or Apple and say that we're going to endorse a private company in order to grow our city. So in the distant future, maybe if there are other cryptos that are deemed as property, there might be a discussion here. But right now, there really isn't any crypto other than Bitcoin that's deemed as property. So nothing else would be appropriate for a public official to endorse, to even talk about. Right. The best idea for a city is you take $1 billion, you buy Bitcoin, you wait for it to go up. Right. That's a good idea. Every other idea is probably going to be legally or ethically fraught with peril. About a year and a half ago, we were the first. I think there's probably about 36 now. So we're still in early innings, but we've gone from 1 to 2 to 3 to 5 to 10. I think there'll be a dozen fairly substantial publicly traded Bitcoin miners trading on the stock exchange by the end of this year. I'm really excited. You might have noticed Marathon was one of the earliest Bitcoin miners to buy Bitcoin using the proceeds of an equity offering. And just this week, they priced a convertible debt offering. They just did it for $650 million under really great terms, just a day ago. And I think you see a lot of other Bitcoin miners that are raising equity and debt. And they're either going to buy Bitcoin mining equipment, they're going to buy Bitcoin. But if you think about it, what you realize is every time a Bitcoin miner raises money, equity or debt or of any sort, that means they're in essence using it to buy Bitcoin. Because if they pay their operating expenses, that's so they can hold the Bitcoin they mined. And if they use it to pay for Bitcoin mining equipment, that's so that they can hold the Bitcoin they mined. And then in some cases, like Marathon, they actually go out and buy Bitcoin in the open market before they mine it. So I think you'll see an acceleration of that. You'll see more companies like Square and Tesla buy Bitcoin as well for their balance sheets.